Doug Elliott is a fellow of economic studies at the Brookings Institution. He joins us now with his reaction and perspective on financial regulatory reform. Welcome to you, Doug.
Thank you, Laurie.
What did you get from Geithner today as to where we stand on regulation reform?
All the things he said are things you would expect him to say. I'm glad he's optimistic it'll get passed this year. I just don't see that. At this point, by this year, you're talking the next few days, and there are a lot of steps still to go through. The Senate has to come together, House has to finish its work, then they have to take the two bills that are very different, reconcile them in a conference committee, bring it back to both houses. There's a lot to do. I think it'll be well into next year, but I do agree with him that it will pass.
So how many layers, though, when you talk about the layers, how much of it is up for debate in terms of the particulars of the regulatory overhaul?
Well, it's quite a lot. The biggest thing that differs between the Senate and the House is Chairman Dodd in the Senate has proposed a quite radical restructuring with the bank regulation to where you'd have one agency for safety and soundness issues, a completely new one that would take over the responsibilities of the Fed, the FDIC, Office of Thrift Supervision, Office of the Comptroller of the Currency. That's a lot of change for Washington. Whereas the House bill, like the administration's proposal, has fairly minor changes in terms of who does what. So that's going to take a lot of work to come up with a compromise.
And there's been a lot of discussion over the Fed's role and some concern that it'll pare back the Fed, that the Fed, in a sense, is taking a hit. How do you think that'll all sort out?
Well, it's a related issue because Chairman Dodd's proposed a totally new agency to do all those things. That would take away the Fed's banking supervisory role, which is what a lot of its employees do. It would be a big reduction in its power. And of course, the Fed has also always argued that it needs to be in the business of supervising the banks in order to understand what's going on in finance well enough to do its monetary policy job. Now, there are counter-arguments to that, but it's at least a respectable argument. And so you've got some real issues here.
Doug, it sounds like you're saying, without saying it, that we should expect some turf wars here.
Oh, there are absolutely turf wars. One of the sad things about this process is the extent to which everybody's been defending their own turf. I'm not going to single anybody out because it's been everybody. And it's a shame because we've just gone through the worst financial crisis since the Great Depression, which produced a big recession for us. It'd be nice if some people stepped back and put aside their own power and just looked at what was best for the country.
But realistically, that's not going to happen, is it? Aside from the turf wars, aside from the various agencies involved, you have the political turf wars. And you mentioned the Senate side. The chairman of the Banking Committee is a Connecticut Democrat, Chris Dodd. As far as I know, and please correct me if I'm wrong, I don't think that Senator Dodd and the ranking member of the Banking Committee, Alabama Republican Richard Shelby, I don't think they see eye to eye yet on this legislation, do they?
They do not yet see eye to eye on it, and that's interesting because historically Dodd and Shelby have done a good job on other issues of finding compromises that both sides could live with, which made it a lot easier to get things through the Senate. I mean, we're seeing with the health care bill how important it is to be able to get 60 votes so that you can stop the debate. Short of 60 votes, you could have the Republicans basically debate this thing forever and keep it from happening. So it'll be fascinating to see how Dodd and Shelby manage to come together if they do.
One of Geithner's more interesting comments today, he said stability was achieved at a lower cost than expected. First, do you agree with that? And if so, why isn't Geithner getting a little more credit then?
I do agree with that. I think if you look back to where things stood in February and March, basically inherited from the previous administration, and look at where we are now, there's been a dramatic improvement. I'm a little bit puzzled why there isn't somewhat more credit for Geithner. He's been getting beat up pretty badly. I think part of it simply is it's really hard for the public not to be angry when there's so much unemployment and the economy's been so bad. Taking a situation and keeping it from getting a lot worse doesn't seem to be something anybody gets much credit for.
Now, Geithner also said that he and the president will discuss TARP. This is another interesting comment in coming weeks. Can you speculate on the details of that?
Look, I would think they'll continue TARP because we're not totally out of the woods. particularly the smaller banks, are in real danger still, many of them, because they have a lot of commercial real estate, which will produce big losses for them. So it makes sense to keep some powder dry. So I think they will continue it, but I think they're going to want to send a signal that this isn't just a giant slush fund and that they're not just holding it forever. So I think they're going to want to cut back the amount from the $700 billion total to something smaller.
And Doug, we talked about the turf wars between interagency turf wars and also what's going on Capitol Hill, but Wall Street's involved in this as well. Secretary Geithner also talking about regulation of the derivatives market. In and of itself, is that something that's going to get done, and is that something that Wall Street is going to fight?
I absolutely think there will be changes to how derivatives are handled, big changes. Wall Street is going to fight a lot of the details, but Wall Street itself recognizes there needs to be substantial differences between how things were done a couple years ago. Some of that's already being done by the private sector, but definitely there will be legal and regulatory changes.
And Doug, finally, again, your time frame, not this year, but at some point next year. I realize that, you know, maybe the political discussion is not one that you're zeroing in on, but is there any way possible you can give us a sense on how this might affect the outcome of the 2010 elections? What are the political ramifications or the political fallout of this?
I mean, intriguingly, while this is potentially a very important political issue, I don't think it's going to end up mattering that much exactly how the reform is done, as long as something is passed by about September of next year, so there's not a fight about the failure to act. And whatever's done is seen to be comprehensive, which I think it will be. The public does not understand bank regulation and, frankly, doesn't want to. What they want to see is action, and they want to understand that it's comprehensive action.
Doug Elliott, Fellow of Economic Studies at the Brookings Institution, joining us from our bureau in Washington. Doug, as always, thanks so much.